Hi, good morning. Welcome to Morning Kappa. Here we come to the week 3 of August with futures. Before we begin, I would like to highlight a brief disclaimer. Trading in futures and options involve a high level of risk and may not be suitable for all investors. This presentation is intended for educational and informational purpose only and does not consist an invitation or recommendation to buy or sell any financial instrument. Please consult your licensed broker or advisor before making any trading decision. The global market landscape in week 3 reflect a clear momentum shift away from Western equities and into agriculture, energy, and digital assets, as global stock market paused near record highs following a benign U.S. inflation print and Treasury yield volatility. Tactical capital has rotated aggressively into soft commodities and spot crypto assets. For local products, FKLI continued to hold a neutral this week, consolidating near recent high alongside an overall neutral macro trend. FCPO remained the sole positive outlier in the agriculture complex, posting back-to-back positive weekly profile for both weeks. In Asia, the Hang Seng, China A50, Japan Nikkei 225 are all locked in flat neutral this week, reflecting cautious institutional positioning across Greater China and regional Asia. In the U.S. market, the Dow Jones, Nasdaq, S&P 500 transitioned from positive into neutral holding patterns. Strong corporate earnings continue to support long-term positive trend, but short-term upside remain capped as investors digest higher long-term treasury yield and seasonal summer volume slowdowns. For the grain complex, the entire grain board staged an aggressive bullish breakout, with corn, soybean oil all advancing from neutral profile into fully positive stance. Bullish National Oilseed Processor Association (NOPA) inventory data showing falling oil stock, combined with Midwest crop belt weather stress, provided a strong catalyst. For metal, silver maintained its positive momentum, while gold and copper paused in neutral this week. In energy, crude oil broke out from its consolidation phase into positive. Meanwhile, natural gas continued to be structural underperformer, trapped in a neutral weekly profile under an overall negative macro view. The product that's on our radar is gold. Gold is below 4,500 per ounce recently, reversing earlier gains amid a broad pullback across the metal market as investors lock in profit following a strong rally. The metal also came under pressure from higher oil prices and rising U.S. Treasury yield, which increased the opportunity cost of holding non-yielding bullion. After hitting a more than 2 months high at 4495 level, gold is now facing renewed pressure from rising oil prices. The lack of progress in U.S.-Iran talks to reopen the Strait of Hormuz has kept inflationary risks and interest rate concern in focus. Further weighing on sentiment, gold continued to find support from fading expectation of a Federal Reserve rate hike following a string of weak U.S. economy data. Market now anticipate the Federal will keep policy unchanged in September. The red box here illustrates gold performance since our last meeting during Morning Kappa. The market has reached a 2-month high, which prices recently testing 4,509. Gold is now retracing and attempting to challenge this recent high once again. The next resistance level to watch is 4538. However, any failure to support above 4430 will result a pullback to 4374 and eventually 4174. WTI crude oil futures climbed towards 85 per barrel on Tuesday, rising for a third consecutive session as prospect for a new agreement between the US and Iran weakened after President Donald Trump stated he was not interested in extending the interim peace deal. The Memorandum of Understanding signed in June, which gave both sides 60 days to negotiate a longer-term peace agreement, officially expired on Monday. Meanwhile, Iran and Oman continue to negotiate an arrangement for managing shipping through the Strait of Hormuz, although the US is not involved in the talk. As a result, crude oil prices have risen due to the lack of progress in US-Iran negotiation to reopen Strait of Hormuz. The green box here highlights crude oil performance since last Wednesday. Prices rebounded from USD 80 level and are now attempting to break the USD 86.25 resistance. If this continue, the resistance hold, reject the prices, the next support level to monitor will be USD 80 and 76.74. Before we look ahead, let's recap the market guide over the recent weeks. There are two profitable market guides with early exit, one in position, one void. Firstly, FKLI Core was closed with early exit on last Thursday with profit 1,325. Next, we also announced an early exit for the CPO Core, closed at 4677 with a realized profit of 1,175. The copper core still pending. The copper core is already in position at the moment. It was triggered yesterday. And for WTI crude oil core is void as the contract expired. Is expiring soon. As usual, the highlight of our briefing, the future market core, we are anticipating a potential opportunity in soybean November month contract. The initial investment is USD 2,145 to 145. The short-term chart setup is positive. The reference price is 1198 and the potential profit price is 1250, targeting a gain of 2,600. Potential stop loss is below 1182, capping a potential loss at USD 800. So the risk and reward ratio is 1 to 3.25. We also anticipate a potential opportunity in Micro Henry Hub natural gas in October contract. The initial investment is USD 268. The short-term chart setup is positive and the reference price is 2.817. The potential profit price is 3.368, 3.754, 4.119, targeting a gain of 551, 937, and 1,302. Potential stop loss prices is 2.5, capping the potential loss of 317. Okay, our exclusive AMPM market guide, which has been active since June, is strategically designed to assist you in navigating the crude palm oil intraday movement. This service provides 2 daily market calls, one in the morning, one in the afternoon. All trades are straightly intraday with no over-session position. And this premium features is open for RHB clients within a limited time only. Interested to know the result? Contact your dealers and reminder for more info. If you are completely new to futures market, we can start your futures trading journey with zero brokerage up to 1,000. So the campaign only lasts till 30th of September. Reach out to us and drop us an inquiry on RHB website today. Well, good. The good news is every trade you place will also automatically qualify you for trade and win lucky draw entries, giving you chances to win a Tesla or to take away a money prizes of iPhone 17. So start trading now and tap on to our exclusive AMPM market guide. And also, we are pleased to announce that our crypto market has launched. So our crypto market never sleep and neither does RHB. We are excited to announce the 24/7 continuous trading, giving you a weekend access to micro Bitcoin and micro Ether. So capitalize on the market opportunity around the clock. So you'll be busy from today onwards on every Sundays and Saturdays. So reach out to our team or drop us an inquiry on the RHB Invest website now. So that's all from me today. Thank you for your time. I'll pass over to the next speaker. Thank you so much.
Right, morning everyone. Welcome back to Morning Cuppa. Aiman here. Okay, so yeah, looking at the S&P 500, right? Well, it fell yesterday by 0.69% to close at 7691 points, marking its largest one-day decline in I would say 3 weeks. So, if you see here, this gap down and also the subsequent retrenchment extended the 3-day losing streak. Of last week or last Thursday, Friday, record high, right? So yeah, the downside momentum was heavily driven by the sharp sell-off in the mega cap semi-coin, also the AI leaders, including Nvidia, Broadcom, and also some of it coming from the Micron, amid the stiff, I would say, stiff valuation as well. Also, the additional pressure coming from the bond yield, which saw it hike up strongly on the inflation and also the uh, spending concern, right? And if you look at the China 50 futures, well, it dipped by 0.48% on Tuesday session, right? Diverging from these Shanghai composite, which managed, to gain by 0.2% gains to close near the 4,000 points level. So I think the slight divergence reflected the sector rotation in the blue chip profit taking following the strong 1.4% surge in the onshore equities during the previous session. So, yeah, I think the broader market sentiment was weighed down by the July macroeconomic data released over the weekend and also the early, Monday data showing that the industrial output growth is slowing and also the retail sales growth remains slow, right? But I believe that the localized strength in the chip makers as well as the hardware counters continue to support the indices, which I believe that the sentiment is pushing the index higher. So if you see the index has maintained above the 50-day moving average line, right? After it crossed above the average yesterday. So if you trade the A50 futures, I believe the positive bullish momentum is now gaining traction and may charge higher towards the 50,500 points level, right? So if you look at the WTI crude oil futures, well, it settled up by 0.38 percent higher to close near $85 per barrel on Tuesday session, extending the gains for the third consecutive day. So I believe the price action was driven by the escalation in the Persian Gulf after the June temporary truce window expired with a formal agreement. So, yeah, the energy market drew strong support as the U.S. President Trump posted on its social truth account, which says that no talks or the conversation are going on right now. With the Iran. So. I believe the reiterating that the U.S. naval blockade remains in the full force and teasing come over the Strait of Hormuz right now. So looking at our Malaysia market, the FEM KLCI, well, it advanced by 0.43% to close at 1733 points on Tuesday session, snapping the three-day losing streak yesterday, while the FKLI futures edged down by 0.06 in a tight consolidation move. So I believe the index buck regional weakness as the selective bargain hunting returned to the major banking heavyweights as well, some plantation names, and also the uh, 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 energy counters as well. However, I believe the broader market sentiment remain cautious, with 700 losers outpacing the 400 gainers, showing that the ongoing profit taking in lower cap counters, while the insti funds anchored the blue chip uh, benchmark. So I think if you focus, I mean, shifting the focus to the FKLI futures right now. So we saw that from yesterday's price action, right? So we see that the um, doji candlesticks was formed with a long lower shadow, rejecting the 50-day SMA lines. And if the bullish to persist and the sentiment, the positive sentiment remain strong, we are looking at 1760 points level, with stop loss remains firm at 1680 points level. And if you look at the heat map right now, well, it highlights a classic, the mega big cap or the blue chip rebound led by the finance, which helped to lift the our market, right? However, the sentiment across the smaller counters remained mixed yesterday, dragged by the heavily by the sell-off in the tech, alongside with the profit taking in the utilities as well, and over broader market, right? So looking at our Malaysia trading stocks for today, we publish Axis REIT. So the stock is on its breakout formation, higher at 1 ringgit and 85 cent level on a strong volume. With that, we expect the momentum to keep bullish and stock able to propel higher to test or to charge towards 2 ringgit, followed by 2 ringgit and 15 cent level. So if the stock to clear below this 1 ringgit and 70 cent support, well, this could reverse the course and trend lower. And also next we have Hartanah Kenyala. So the stock experienced a breakout as well, at 63 cent level. So if the stock to remains bullish, we expect the price to reach 68 cent level in the coming session, with a high volume, and second resistance is at 73 cent level. So do keep an eye at the 58 cent level for any attempt of reversal. And for today, we have two breakout stocks, which is Axis Street and also Hartanah Kenyalang. So do keep this both of this list in your watch list for us to monitor as well. Yeah, looking at the FCPO futures will recover by 0.81% on Tuesday session to trade near 4,900 ringgit level, erasing the previous session's losses. So I believe the advance was boosted by the spillover strength in the veg oil market and also the crude oil prices, as the geopolitical friction to lend background support to the biofuel feedstock demand, while the higher July stockpile data from the MPOB and also mixed data of first to half of August, the cargo export updates remain short term overhead drags. The aggressive sell-off were prevented by the strong pre-festive restocking demand out of India, and this is something that we need to take note on, right? And once again, we still keep our positive trading bias remains intact, anticipating the breakout over 4,000 5,900 towards the 5,100 level. So yeah, that's all from me, and I pass the floor to next presenter. Thanks, everyone.
Yep. Morning, everyone. Thanks, Aiman. This morning we have with us the AMMB first quarter FY March 27 results. The net profit MYR 520 million. This was 1% higher year on year, flat Q on Q, and forms 24% of our and consensus estimates. We consider the results to be in line. Now, despite the a bit, soft headline net profit numbers, we do highlight that the underlying numbers are generally positive. Operating income was up 5% year on year, 3% Q on Q. The pre-impairment operating profit is up 7% year on year and 8% Q on Q, while pre-tax profit was up 4% year on year and flat sequentially. Tax rate was higher this quarter, and that's a function of changing revenue mix, where previously, because of a larger proportion of trading and investment income that attracts a lower tax rate, this time around it's more from asset growth, net interest income, where the tax rate is higher, but sustainability of such income is also better going forward. As mentioned, operating income was driven by volume growth, with assets up 9% year on year, 3% Q on Q. Loans were up 7% year on year, led by wholesale as well as business banking. The retail book has started to stabilize, while the investments in financial securities were up 24% year on year, as AMMB is starting to rebuild this book. During the quarter, wealth management income helped drive the non-interest income segment, while credit costs was actually somewhere in between that of a year ago and fourth quarter at 19 basis points. There was a 53 million overlay made. This was for business banking relating to geopolitical risk, but there was also an 88 million ringgit write back in terms of overlays for the retail, as management is getting more confident around the asset quality of that book. Loans growth, as mentioned, 7% year on year, 1% Q on Q. The financial securities book, just a bit of color there. AMMB is planning to shift away from the lower yielding, shorter dated MGS securities to longer dated US Treasuries, where the yields are higher, and that should be positive for margins down the road. Deposits were actually up 4% year on year, lagging the loan growth, but that's a function of two things. Firstly, AMMB is trying to diversify funding to other non-deposit sources, and secondly, to help also mitigate the impact of deposit competition. So, they're looking to diversify funding sources. Impaired loans, this was slightly higher at 1.62%, the GIL ratio, from 1.59% the previous quarter, coming from mortgages as well as real estate. Both are actually largely secured, and hence, you don't see any major provisions needing to be set aside. Plus also the fact that M had already made overlays previously. Overlays balance is about 267 million ringgit from 307 million ringgit previous quarter. But there's a notable shift now, where the split is 58% relating to business banking versus 33% previously. Again, reflecting that management is getting more comfortable with the retail portfolio, but at the same time adding overlays for the business banking side. In terms of briefing takeaways, just one highlight was that the July earnings run rate, management said that is better than what we see in the first quarter. So if you recall, the second quarter FY26 was actually quite a high base, and with that better run rate in July, management has seen, they are hopeful that year on year you can still see some growth coming from there. All in, no change to our earnings forecast, but we have raised our target price to 7.94 ringgit from 7.62 ringgit previously. This is after we lower our cost of equity assumption by 25 basis points to reflect that increasing comfort that management has on asset quality, plus the overlays that they have in place. So we retain our buy call. Really, it's a dividend story where dividend growth continues to outpace earnings growth, and also, of course, the 2 billion potential excess capital that the bank has with the implementation of Basel III reforms on 1st January 2028. Okay, thank you. With that, I'll pass you to Adam.
All right, thank you, David. So today we have a results review for MGB's first half 2026 results, which saw core net profit of 27 million ringgit, 15% year-on-year higher, which met 50% of our estimates, which we deem to be in line. In terms of the operating segments, such as the construction and development arm, both saw its PBTs in the second quarter of 2026 growing by 19 and 16% year-on-year respectively. For construction, it was due to some cost optimization combined with lower losses from Saudi, while for the property arm, it was due to some unused accrued costs which was booked back after the deferred liabilities period for certain projects. So, with that in mind, we made no changes to our earnings estimates given that, the results were within expectations. Moving forward, we view that property would be a stronger year, particularly next year, with a few launches taking place with a total combined GDV of more than 1 billion ringgit. So that is something to look out for. So all in, maintained by with an unchanged target price of 63 cents. I'll stop here and pass on the floor to my next colleague, Queenie. Thank you.
Okay, thank you, Adam, for the presentation. Okay, so let me share my screen first. Okay, so today we have a trading idea report on a company called Visdynamics. Okay, so Visdynamics is a Malaysia-based semiconductor equipment manufacturer specializing in the design, R&D, assembly, and tuning of back-end semiconductor equipments. So the company has provides 4 types of products. First one being tray-based handling systems, which is its key products, and then second being tube-based handling system, followed by build or turret handling system, and then other automation equipment. Okay. Its sales revenue covers North Asia, which is about 79% of its FY25 revenue. Then followed by Malaysia, 70% of revenue. Then Southeast Asia, 3.4% of FY25 revenue. Okay. So first investment merit for the company will be it has a broader customer base as well as riding on the power semiconductor growth. So Vis is well positioned to ride the back-end semiconductor CapEx upcycle with global test and assembly and packaging equipment sales expected to grow 31% year-on-year and 9.6% year-on-year in 2026, according to SEMI. Its patented inspection and pick-and-place system are widely used for final inspection during packaging, with its customer base expanding significantly over the years to include local and China-based OSATs, multinational IDMs, and power semiconductor manufacturers. So power semiconductors offer an emerging growth avenue for Vis, as silicon carbide or gallium nitride chips and power modules require greater handling and automation compared to conventional chips. Vis high throughput tray handling and integrated visual inspection systems are well positioned to capture this demand, with customers planning for higher CapEx over FY26 to FY28. Okay, we also see there is some leading indicator of stronger earnings ahead. So as at end 2Q FY26, Vis hits a 3-year high of 22 million inventories and contract liabilities rose to 10 million. So its inventory has been built up since early 2026 in response to rising inquiries, particularly from OSATs expanding in Malaysia and China. The higher contract liabilities, mainly customer deposits pending equipment buy-off, provide visibility for revenue recognition for the next 2 quarters. There's also capacity expansion that comes at the right time. Okay, so geopolitical tensions and tighter technology controls are accelerating supply chain diversification and semiconductor localization, particularly in China. So as we know, the company in North Asia exposure, which accounted for 79% of its FY25 revenue, which is mostly from China, provides direct exposure to this investment cycle. Meanwhile, demand is currently outpacing its production capacity, with new order having approximately 3-month lead time. The group's new facility, targeted for completion by 2027, will triple production space to 60,000 square feet, supporting future growth. Okay. So with a strong second half earnings expected, this year we will see a break-even year, a turnaround year for the company. And next year or the year before, we will see the company to return to its peak earnings. Okay. So based on a ascribed P of 22 times, which is in line with the KLTech's 10-year mean, onto its FY27 F earnings, we derive a fair value of 77 cents. So key downside risks for the forecast, for our forecast at fair value, will be forex fluctuations, delays in product deliveries, supply chain disruption, loss of key customer, and slowdown in AI, semiconductor, or automotive industries. Okay. Yeah, so all in all, Visdynamics is poised to ride the back-end semiconductor CapEx upcycle driven by AI, high-performance computing, EVs, and industrial automation, while benefiting from also capacity expansion and supply chain localization. Record high inventories and contract liabilities point to stronger earnings conversion ahead, while rising power semiconductor orders and new capacity should support growth. This attractive laggard play on Malaysia's chip equipment sector is trading at a cheap 11 times FY27 FPE. Okay. Yeah, I think that's all from me. Thank you for dialing in for today's morning kappa session, and we hope to see you guys again tomorrow. Thank you.